Hi everyone. Let's look at the Bitcoin. There, it's pain. It's boring. It's frustrating. It's nothing positive so far. However, the only positive thing that I see here is it is following the technical levels, and at this moment, it doesn't want to go down. At the same time, it is not able to break above the required level. So there are different patterns. I'll highlight them. Over the time, patterns have changed. So what I'll do is I'll hide the drawings and zoom out a bit. Now, without drawing, I'll try to explain and then add some drawings. So this is the first drop. Okay, and when it was moving in this way, it was it had retested this low of May 19th twice. And so this was the most significant bounce because it went up all the way to S4.1. Let me make sure the number is right. In fact, S4. Yeah, which was very positive. And this was the move which nobody liked because reaching to S4 and coming back to this level, not just that, but breaking below 30K was scary. At that point in time, everybody was tracking this left hand shoulder with respect to the right hand shoulder. And to me, this pattern was invalidated long back. When actually it bounced, this pattern was invalidated. But let's say if this was not so symmetric, in that case also this bounce it had invalidated. So right now this head and shoulder is not playing any role. There's no head and shoulder in my analysis. So this bounce had invalidated. In short, this is way beyond. So this is just extension, and so that's why I'm not looking from head and shoulder point of view. Earlier I was when it was somewhere here. But when it bounced here, and especially this one, I said, forget about this. This is different. So that's one thing. When it was here, this is not a symmetrical, but there was a formation and there was a curve bending, so which was more significant, the band. That's why it's so important. What we have, this is like a dome structure, like if you connect these upper edges. Similarly, now, so that's why my focus is not anything from the past but only this zone or pattern, where if you look closely, there's no symmetry in this one. There is no geographical pattern or there is no definite pattern, but there are some pattern in isolation. For example, you see this is a dome. So if you look at this one, this is a left hand side, and then this is a dome structure. What you expect is I'll move on the upside like this, and then that move around 42K will break about this pattern. If you consider this drop, this dome, and an upside move, right? So in that case, it will break about this whole entire pattern. That's one way to look in. Another way to look in is this is left hand side. This is a centerpiece. The centerpiece is at angle. If you look at this one, so this is a centerpiece, and then there is a left hand side and there is a right hand side. In this case, the left hand side and right hand side are not symmetrical. They are totally asymmetrical here. And So that's why there's no definite pattern, but at least it gives you certain thing, like two things. One, if you add the volume and the pattern, the left hand side and the right hand side, indicating that we are at a decisive level from its distance point of view. If you consider this move as a centerpiece, and then left hand side and the right hand side, and if you club this aspect with volume, the volume is also suggesting that it is declining. I had you What you could do is you could add volume average, moving average, like this. Maybe I'll keep 14 2 weeks. You get this line, which is a moving average of for volume, and it is declining. So declining volume is neither positive nor negative. It's all about end of the consolidation. So we are very close to the end consolidation. You would see some spike, sorry, in between. That is all right. But what you have to do is you have to take an average, or maybe you can simply draw a straight line like this. In fact, like this. Yeah. I don't want drawings. But you can imagine if you connect this one, then the volume is declining. Or maybe you know what? Let me make this moving average to 7. Then it will show you that declining. You know, yeah, this is reflecting. This is little hump, but you see that this is how progressively it's going down. So this is the area where you we are going to see action. Now at this moment, the action on what side is, the volume will never tell you that the breakout will be on the upside or downside. Okay, that's one thing, it will never tell you. However, you have to put different things or aspects together and come up with the probable outcome. So this session is being recorded. Okay, so where I was. Okay, so this is a centerpiece, this is left hand side. So distance and volume point of view, the result, we are very close to the outcome. Okay, now this is scary. Why? Because this was a point of bounce, this is a point of bounce, these are all support. You see this support. Now this, if you consider this 31k line on an average of approximately 31,100, has been a support for multiple occasions. One, two, right? um, and now here, and then this is another layer, which is 30k 30,100, which was May 19th and June 26th. And of course this is for a very brief moment, but I would include this into this one. So the point is, this is a very critical moment. So probability wise, I mean the level wise, the downside, it is weighing more on the downside because it is closer to the support. So this is like a pendulum. When you have a sideway movement like this, but this is little tricky. This is actually at an angle, which you'll see under the channel. And but however, this is anyway weighing more on the downside at this moment. So this somehow, for last 3 days or maybe 4 days, 3 to 4 days, including today, it is able to hold this support, and that is interesting. And that's the positive part I see. There's no other positive part in this whole entire movement at this moment. So its ability to hold this level for 4 days, to me, has significance. And If I drill down, there is third aspect. One is the distance on left hand side, right hand side, the volume, and also this pattern. If I highlight dome structure, if you look at the dome structure, that is also, this is a bigger loop, this is a smaller, this is a smaller, this is even smaller, and this is the smallest. So what you see here is, you see these loops, there's kind of a U shape. I mean, this is not symmetrical, but that's how it is. But this is like getting smaller and smaller. If you pick up this one unit, second unit, third unit, fourth, like that. So this is ending that way. So even the dome is ending. Okay. So what I'm trying to say here is, if you look at different patterns here, we are very close to decision. That decision could be in few hours, or maybe in day, or 2 3 days, in my point of view, from these patterns. Okay. Now the question is, it all depends on where it consolidates. Consolidation here is not positive one way, because this is too close to the support level, lower support level. However, if it can break above, so okay, let me rephrase a bit, because I don't want to sound contradictory. What I like is, it didn't go down, even though even though it touched this 31K level multiple times for last 3 days. So that's a positive part. But it cannot just stay here. So what you see here is green candle. This green candle has to be larger and land up at least at 37K. What we want is at least 37K, then it will shift the balance. So this is positive in a way, that is green candle, and you see that it is not making new low. So that's a positive part. But what we want to see in the next few hours, that it goes and goes to 37K. That's that. And so that would break above this dome, which is not so good at this moment. It has to break above, otherwise it will just collapse. Now let me hide the volume and bring back some drawings. This is a little messy, so let me try to find out another. Yeah, this is very a simplistic chart, where it's more like it's a rectangle rather than a channel. I mean, you can visualize in different ways. Earlier, that version, Binance version or chart, had channel, but this is more simple version, and I think I prefer this one better than the other one. This is very simple, because this is covering the top edge here, and then this is a bottom edge, and this one, and I picked this range, and that gives us this resistance zone. So this is a someone who wants to look at the bigger picture and doesn't want to get into those multiple interim supports. This is the view. That Binance view is more detailed view, and this is a zoomed out version, where you are looking at a big picture. Big picture, let me zoom out a bit. And in this big picture, maybe we should check this at a 3-day scale. In a big picture, what you see here is, if you connect this top, this was the ceiling, okay, the upper line, and this is the trend line. Okay, this is the trend line. Now in this trend line, of course, this is a resistance even for this level and all. So this is a structure we see. Now if this consolidation continue at this level, then what will happen over days? It will continue dragging down, and then there could be a big drop like this, and this drop could be up to this level or this level or this level. We don't know yet. um we'll figure. I'll give you more detail, but at least this is the range. 22K is the range. With the deeper support is 22K. So there are interim supports which I'll provide when it is close by. Right now I'm not giving. I think I have given one. I'll have to check on the Binance chart. But this is the lowest one that I'm thinking at this moment. In that case, it will hit this trend line, and also there is a technical support at 22K, which is I think on Binance. This S7 22555. Okay, but we are not talking about that for now. But this is important to cover the aspects in just in case. This is a weekly call, so it makes sense to talk a bigger picture here and think about all possible scenarios, right? So if this support is broken below, slowly it could drag below, and this is the lowest level. 22K 5 22555 is the level from my theory point of view, and also from trend line point of view. This is the probable destination on the lower side if this is broken below. Now, even if that happens, there is no threat to the trend, because this trend is not going to die by any mean, even if it hits that 22K level. But it would be devastating for alts and all the asset. I mean, all the coins. That's for sure. So in that case, we know what to do. We have these supports known, right? And I would reiterate another time just to make sure it is reinforced that anyone who do in and out with 100% is likely to lose more compared to someone who do incremental in and out. So the risk management has to be could be in incremental manner, where because when you see a drop, these are the levels, and there will be interim support level, and the bounce could be so fast that it may not give enough time for those who is out 100% and may end up with a very expensive re-entry. Those who manage the risk incrementally are would not be completely out, but then they would have opportunity to, because they are not completely out, and if it bounces, then they can buy back with the cash amount, whatever cash is available, at a lower price and average out. Another aspect is anyone who is in loss is likely to hold, because that's a human psychology. So if I had to simulate, let's say BTC comes down here, someone is in loss, that person would think that I'm already in loss, what should I do? So I cannot advise, but the same principle or best practice applies to everyone, that if not 100%, that trader could or may reduce at least 10% or 20%, because if it goes down, then that cash can be used to buy more positions. I gave my example of ICP, that I it's not that TA can control, of course not. And so ICP, I was out for 4 times, but in the end I have more position at this moment. I'm not saying I'm profitable, but I have more position at this moment because of this strategy. that you have to take action on supports and then opportunity to buy. So there is another way to people do is they keep on saying buy on dip. I don't totally agree on that, because buy on dip means what? I mean, you have to have infinite money to do that. How can you have that much of money? So if a coin keep dropping, how much cash are you going to put, unless you are buying in incremental way? But so buy on dip has to be understood pretty well. There are two approaches. The buy and dip, buy, what it means is you have cash, so they're not thinking that you're already in position. So most of the people think as if you are on cash and as if this is your first day, but they don't realize that people who are following all these tweets are actually already holding your positions, and they are unlikely to have cash in hands. So when you see buy on dip, I understand why they say that. Why they say, because the trend is not broken. What they are not saying is what is the practical approach. Because to me, buy and dip is misguiding. It means they are not explaining fully. It is incomplete information to me, and that would do more harm than help, in my opinion. So I'm trying to fill in those missing pieces in this session, where I would say, let you have to assume whether you are holding or not. So if you're holding, there are scenarios. If you're holding, you might be in profit or you are not in profit, and then approach would change based on it. So for an example, if I bought somewhere here, right, and Bitcoin is here, even this is a threat, and if I know that this is my lowest level, what I would think as a trader, that even if it drops, I'm going to lose my profit or little bit, or but not principal. If I bought it here, or maybe I'm left with little profit. So in that case, if I had entered here at 18K, 19K level, or 20K level, right, and if it has to come down to 22K, it's a trader's decision to say, okay, you know what, I'm already in profit. If that to happen, I'm not losing any money. I'm still in little profit, or let's say very little profit. Yeah, in this scenario, if someone bought it here at 10K, and if it is going to 22K, the scenario would change. That trader will not think about sell, because from 31K to 22K, it's a loss in profit. But why to bother if you bought at 10K? But so these are the scenario where somebody is on profit at different level, and how one could think or may think, let's say. But if someone has position, you see that there are so many scenarios you have to think, and that's why it's very personal decision, that what should I do as a trader compared to. So you cannot copy anyone. What we can discuss is these scenarios, where in these two scenario, one is in good profit, one is in profit, but if it comes down, it is more or less, losing profit. Okay, or left with little profit. Now third scenario is where somebody just entered, let's say. The fourth scenario is obviously somebody entered at a higher level, and I have cases where, on a personal front, that somebody bought it here and then asking me that what should I do, and I would simply say it's your decision. So let's say if somebody, um, for example, the decision will change dramatically or drastically, just by having a different situation. For example, if somebody has invested 5% of the money in crypto, from that total asset, and let's say invested here and it drops by 50%. So that person's overall loss at the portfolio level is around 2 to 3%. So now that person, it's up to them that okay, now is it 2 to 3% is a situation where you get to panic? Maybe not, or maybe yes, depends, but maybe not, because the crypto is volatile. And if it comes down to 22k, even further loss, so let's say 3 to 4%, your loss is little one, around 3 to 4% at a portfolio level. I'm talking about those who has put, let's say, 5% of the money and so on. So in this scenario, the person has actually bought at the peak, at the top, but because the amount of money is less, the decision is going to be totally different compared to those who have put a lot of money in terms of percentage from his or her asset, total asset point of view. Now, of course, in that case, the pressure will be high and decision would be totally different, right? So that's a fourth scenario, correct? Now, the fifth scenario is someone who is not in. We'll talk about that later, right? Because right now we have different members, or subscriber or individual would be in one of these four scenarios, where two scenarios are related to profit, um, that their profit is about to, like, at a break even, or they have a good profit, or they are in loss, but loss is manageable, and somebody has a loss which is like really heavy. Okay, so if we think about third scenario, which I was talking about, that there is somebody bought at top, but the amount of percentage is very less, then wouldn't worry. Now, if somebody has entered recently, and of course that there's no profit and loss, right? That's not that's also another scenario. We should take that one. So let me cover this one. Somebody is in loss. As I said, it's very hard for anyone to reduce position when the probability of going down is higher, because somebody would think I'm already in loss, and the fear is what if it goes up. And that's where my point comes in, where selling is not about selling 100%. Selling could be 5%, 10%, 15%, 20%, and so on, incremental manner. So even the person who has is lost could do this approach. As I said, in my case, when I bought ICP, I exit 4 times, and today I'm not saying I was in profit, but I can say that I have 60-70% more positions than I had earlier. Now, whenever it goes up, then of course I'll have more benefit compared to those who are just holding up. So that's a mistake, someone just holding up, despite of those who had who are an opportunity channel for long, got this alert. Our BTC alert is still on, and if anyone has not acted on that alert, of course, would be in loss, correct? But point is, that's about past. Let's say somebody ignored that alert and not acted based on that, or remain along, let's say, and didn't totally ignore the alert, BTC alert. Okay, now for those, it's okay, because you cannot just remember the past, and if you're if some if that person is in loss, cannot just keep thinking about it. But that person cannot make the same mistake again, even though um, he or she is in loss, if it goes down further, because you don't know where it will stop. So this is a lower level. It doesn't mean this is the last level. It is never like that. So that's what happened in last bull run. I'm oh, this is the wrong chart because it doesn't have the history. This is Coinbase. That's what happened with the last bull run, that when they had this drop and then bounce, and somebody is here, let's say we are here now. This is where, assume this is a current situation, and I'm purposefully taking all this scenario because this is being recorded and this can be used later on also. um just to clarify, I'm not saying it is going down at this moment. The bounce is very positive, but I want to cover this scenario because this can be helpful later on. It's not just for today, but this can be very helpful for later stage as well, so you can bookmark this video and watch later on also. So if you think about last um, bear trend is not going to tell that bear trend started. This is how it starts, and now this, if you are not able to get out here, that's all right. But now when it is here, one cannot just ignore that this is near the support, and then you know that person has to act. So I'm not saying history is going to repeat, okay, but we are just trying to. So if it bounces well, but you have to consider that this is the low, and if it comes down to this low, you are not going to ignore this low, okay, and so on. Now here it played really bad game here, up and down and up and down, you see, and so on. So point is, you know that this was a point of bounce, so you're watching this, you're watching this. So the bounce were not good enough. If you look at all this, bounce were not good enough, and then it was like moving sideways, and this is the capitulation, the final drop. So if you are in loss, that person is even in deeper loss, right? That's my point, that it's not that. So let's say, if this was not the case, and let's say if this was if this was upside breakdown, what in that case? So let's say you are prepared here, you're not 100% out, you're not assuming anything, but you're out. But let's assume that there was a drop and it broke this support, and I'm just hypothetically changing the scenario. Instead of this drop, assume there is a huge green candle on the upside. Now what? When you sell 100% and assume that this is a big giant upside move, then you become victim of FOMO, and you feel that, oh, I've been holding all the times, I was in loss, I sold because I thought it's going to go down because the support is broken, let me sell off. And then you see a giant green candle, then you are even in a bigger mess. Why? Because you are already in loss, you held up for such a long time, and when you sold, it went up. And that's where you hear people that market, I mean, price goes down or whatever only when I sell, or that's what they do. That's an excuse. That's not the right thing, because market doesn't know you, but market doesn't care about that trader. So that's just an excuse of the mistake that trader would do. So here the mistake, what is the mistake is exiting 100%. So the thing is, when it goes down, you don't know whether it's going to end up in this or it will going to go up. But when it drops, of course you have to take action, and that action could be reduce, not exit. That's the message I wanted to convey here. Even somebody is in loss, because if, let's say, another scenario where it make another candle, and let's say then there is a green candle, then you have an opportunity to buy back. And even if it bounces from here, you have opportunity to buy back. So you will buy what you reduced at a little higher price, but the point is you're not completely out, and so on. So if this, that's the point. Now let's say if you are part of this, you reduce, see here, you see another drop, you reduce, keep on, and then you are, let's say, reduce in couple of or 2 3 iterations. So you should have started from beginning, but if somebody missed, could start from here, and so on. Because here there is a bounce, not necessarily it would have stopped here, because at this point in time many were talking about 1K. I still remember. So in that case, if that had that to happen, at least you would think that you are in loss here. But because you are incrementally reducing, if it had to go 1K, actually you are on cash, and then if you buy, you would end up buying more positions than what you had here. So that's these are the scenarios I wanted to take, as if if it had happened, because then you would be able to relate and probably plan. If you think that it makes sense, then you can take these practices in reality, and you have a choice to incorporate in your planning, right? So I'm just trying to simulate some scenarios, that as a trader, how one trader can think about plan. Because question is, I keep on saying planning, but you might be thinking, how should I plan and what should I plan? So of course I cannot advise, but I can always take a scenario like the way I explain and say, these are the options, and if there are pros and cons, and what depends on what you do, these are the potential outcome, right? So that way I can at least convey that, okay, these are different options, and if you think this makes sense, then you may take it, right? So so I think this is good enough. Let's go back to our previous structure. Yeah. So when you see here, you don't know where is the end. Okay. So it could go all the way here and bounce, and then that could be the last. Or in a worst case scenario, it could continue going down. This could be just a first leg, consolidation, second leg, consolidation, and a third leg. Who knows? So the point is, nobody knows. The reality is, nobody knows this. Everybody would try to assess probabilistically. Okay, at this moment nobody knows. What you can assess the most is whether it is weighing more on the downside or upside. To me right now, if it comes down to this level 30K, then it will weigh more on the downside. To me, this is still not done. This is not going down, not yet. That's my stand at this moment, right? That's more important, and there are various reasons I explain why I think so. Okay, so but I wanted to cover a trader's point of view as well by taking some scenarios. So, and especially wanted to emphasize that those who are in loss could also go with this approach, because that's the biggest mistake they do by not acting on the situation. So being in loss doesn't prevent you to go for this option. So that's the most important point, because that's the hardest thing to do. Mm, yeah, so on ICP case, I had done in and out 4 times, and my entry was at $30, right? And I updated everybody when I entered, remember? And yesterday it was very close, like 31, 32, I think. And I had a choice, because that was like coming back to my near my entry level. Of course, if it would have gone below that, I would definitely exit it, no doubt. Maybe 30%, 40%, or whatever. And then same approach. And if it, let's say, had to had 20, then I would have bought back whatever. Then I would have more positions, and so on. Because to me, the coin you buy, if the coin is really shit coin, or coin has his project is going to really die, then it's a different story. Otherwise, that's the approach. So coming back to my earlier point about buying on dip, people are not telling the full story or scenario. That buying is not buying on dip. It doesn't mean that you have infinite cash. you have limited cash. So in my case, I'm 100% long at this moment, and if it goes down, I don't have cash. What I had to do is I had to reduce for me to buy at dip. So buying on dip is fine, but then you have to have cash. You cannot just pour more and more money. What if it keep going down? How much money you are going to put? So in that case, you might end up with a huge loss. So that's to me suicidal. So that this approach has to be explained very well, in my opinion. It is not explained well. Right. So I think after this recording, you can ask me more about what I said if you have any questions. But this is what I wanted to cover on handling the risk. Okay. So no matter what scenarios you are in, this would work in my point of view. But the key thing is, I think I had to go a step back, and key thing is when you start, the same approach is applied when the second position is taken only when the first position in profit, and you never take the second position unless you start making profit. That means you have some cash, you never start with 100% of your money, never, never, never. If you keep these simple best practices in mind, I don't think one can really hit hard in any situation. But it is very hard to do. Having a cash, so these are the two most um, reasons, in my experience, people lose most, and they are in under tremendous pressure. One, when they have cash, they put all to start with, and especially they start with fast moving coins or alts, which like very, this is the tendency because it's all about making money. Of course not, I mean, why not? But that's number one mistake, starting with 100% in with a fast moving coin or any coin for that reason. And number two, when they make loss, they get out 100% and then become victim of FOMO when market goes up. And second, and the third scenario is similar, where they are in loss, and then you know coin or price goes down even further, they are not able to manage the risk or take any action, and just ignore, and then end up in more, and a even worse scenario where they keep adding more position in that case, unless they are really wealthy and they have a lot of money to put in, then it's a different story. But I'm thinking about a practical scenario where you have very finite and limited money, and you are already in, and you are in loss. So how can you add more money? There's no way you can buy on dip. So I think these are the main things, or reasons why people lose the most, and they're stressed out. And I think if these scenarios are taken care, then I think that they would be in really good positions to handle all this kind of challenges. It is doable. It just requires simple rules like this. That's what I mean about planning. Planning means you should have a bunch of rules and levels that you decide what to do when, and you act on it. And I also want to reiterate the fact that you see there are so many things, and it all depends on your individual situation, and it cannot be, I mean, you cannot expect anyone to say what he or she should do, because everybody is in different situation. So with that note, I would end this session on Bitcoin. But I think the summary is, we want Bitcoin to be closer to 42K for it to break above. I'm talking about a big picture. We want Bitcoin to be away. To start with, it must reach 37K and then should break above 42K, this orange line, whatever was the recent high, right? That must be broken above for it to go up, right? And there is one more resistance, but that's not a big deal, for around 48K there is one more, but I don't think that's a big challenge at this moment. The biggest thing is, so 37K, 42K, that's it. These are the two step I mean approval sort of first approval on for the upside is 37k, second approval is 42k, and then should be good. Even if it 48k is the third one, I should not ignore it, because technically 48k is the third level. But right now we have a bigger problem, so I'm emphasizing only on 37k and 42k. Once it broken above, 48k would be the last. So there are three levels it has to break above for it to escape out of this mess. Okay, and the downside, as you could see, if it breaks below, it could land somewhere in between, or this can be an extreme end. If it goes below 22k, or there is, we'll see, there's a lot of, we'll have a lot of sessions in between, so I don't want to talk about it, right? And we don't want to talk much about downside at this moment unless it comes back to around 30k near this white line. We don't have to talk about much, but it is good to know. Okay, so that, I think I covered all. And yeah, that's it for now on Bitcoin.